This is something that a lot of people put within the comment section and a lot of people ask me about. I try to respond to as much as I possibly can, but I can't do analysis on like every single thing that people ask me about. Now, Enph is one of those things, and you can see here, I actually will go back to it here on the weekly. I wrote this level. I don't know when we wrote this or what we were talking about, but this was the level that we were watching for at 170. And I had some students today within our Discord, which if you're not a part of it, you should definitely check it out. It's completely free, and the link is in the description. But I had students asking me, what do I think of Enph now that it's down at that 170 price point that we were talking about before? The thing that you have to understand with this, a lot of good things, right? Number one, like we're in a massive uptrend, even though we are still pretty far from this 200 SMA. And ever since we broke above the 200 SMA on January 22nd, 2019, we have not pulled below it. Now, there are times that we have come back down and tested this 200, or not this 200, this trend line. And every single time we've touched this trend line, we have bounced to perfection. Now, the weekly chart right now, we're down 23%, and we're attempting to hold this level. Now, I don't know much long-term about this company, like I'm going to be quite honest, but the news behind it was that the solar company was the worst performance in the S&P 500 after the company had mixed results for their first quarter and issued disappointing second revenue guidance. Enph warned of a solar slowdown in the US, which is the company's largest market by far. Obviously not good. We're not growing in the US, basically, said CEO Bardry. I'm not even going to try to destroy that person's name. He said the combination of higher interest rates and moderating utility bills in places like Texas, Florida, and Arizona means consumers are delaying the decision to go solar. The company earned $1.37 per share on an adjusted basis during the first quarter, which was 16 cents ahead of Wall Street's forecasts. So they beat, but as you know, that doesn't really mean shit. Revenue came in at $726 million, shy of the expected $732 million. The company said revenue in the US specifically fell 9%. So obviously, the US isn't growing as they said, and it doesn't seem like they're going to continue to grow in the future, which is not good. So the first thing I want you to understand, I don't know anything about this company. I don't know anything about solar. I'm not invested in this company. But the reason it's down 25% today is for a very fundamental reason in the market, which is not good. For the second quarter, which revenue projections don't seem to be great, $700 million is projected to $750 million, while analysts were looking for something along $773 million. CEO said that they expect the picture to get incrementally better later in the year as installers offer new financing options, among other things. One side note, I don't know if you guys ever knew this, but I think it's something like 80% of all loans in the United States are generated in the last 3 months of the year, primarily for Christmas bonuses, I assume. But I know a lot of loans are done at the end of the year, which is why a lot of business is done at the end of the year. So we're growing very rapidly in Europe, he told CNBC, adding that it will be a big driving force for them. Bank of America, therefore, downgraded Enph, and the stock is down 23%. So the thing that I would say is, obviously, across the board, be very careful, because at the end of the day, I don't know anything about this company long term. But the thing that you have to understand is that, yes, while we have a really good trend here, while we've pulled back and bounced at this level many of times, it doesn't mean that the fundamentals of the company or the market have not changed. It seems that they definitely are. And I don't know, this is something that you should do on your own, because I'm not going to, unfortunately, spend the time to deep dive this company because there's too many. You have to find out what percent of the revenue comes from the United States. If it's like 50, 60%, and they're like, hey, like 50, 60% is from the United States, and we're just not going to grow this year, and we're actually going to decline in the next couple of years, that's not good. If it's like 10%, 20%, and Europe is growing, that's better. But I don't know. At this point, I personally probably wouldn't be buying it. If it drops to 140, I'd probably be taking a position there just because of the RVR, setting a super tight stop at 120, and then, just kind of hoping that, the market recovers, or that their continued growth in Europe pushes forward, and that, by the end of next year, we get a pushback to 340. If not, I'd be setting a hard stop loss, because once we're under this 200 SMA, it's kind of no man's land. Like if we break that 140 level, next area is 110, from there 60, and from there 40. So I would definitely be careful with that.